back like we never left with another week of Bag Talk, where the sophistication of business and finance is met with a little bit of flavor and the swag of fashion and lifestyle. I'm your host, Carlton Clay, and as always, my co-host, Miss Gabriella Godde, aka Miss Gabby. Miss Gabby, how you feeling today?
I'm wonderful today. Thank you.
Awesome, awesome. So we have a special guest in the house today. She is a mortgage broker, and again, we're happy to have her on the show. We have Miss Michele Valencia. Miss Michele, how are you?
Hey, I'm doing good. Happy to be here. Thanks for having me.
Awesome, awesome. Not a problem. Happy to have you on. Definitely want to pick your brain a little bit. We're going to send it over to Miss Gabby for a second, but then after that, we'll come back and we'll get a little in-depth look at your life.
Can't wait.
Awesome.
Thank you, everybody. Well, I just want to talk to you about my wonderful friend, Michele. So, we met long ago, and we actually met because we're both loan officers, but we also have a love for Jesus. And so that's what really bonded me to her. And then we started working together at Groves Capital. But what we love about working for a broker is that we both have our own DBA. And so, therefore, we are now brokers that get a lot better rates. Right? Wouldn't you say?
Oh, yeah.
So what's the difference, Michele? I'm just going to ask you first. Let's just say, I know you were talking to me about why should someone work for, or why would someone hire a broker opposed to a direct lender?
Okay. Stuck in that wheelhouse of the only options that direct lender has. You're stuck with whatever rates they have for you. You're stuck with whatever terms and programs they have available. You're stuck with their overlays that they have. So for instance, like you might have a direct lender that says, okay, we're not going to let your debt ratio go over this amount. But with a wholesale broker, your debt ratio can really go much higher, which means that our client approves for much more house. And in this market, it's so important to qualify for as much house as possible because we know interest rates are a little elevated right now. Housing prices are still much higher than they were, 5 years ago. So qualifying for much more house is something that's just so important right now.
I love that. I love that. And when I used to work for a direct lender, my rates sucked. And so now that I'm with a broker, we're able to shop the rate. We're able to do what's called a borrower paid. That means we're going all the way down to par of the rate. And then the borrower decides what rate they want. And they're paying way less for that rate than if they were with a lender, or a direct lender, I should say. They would be stuck at whatever rate they give them. And the other thing I want you guys to know too, if you're with that direct lender and you get denied, guess what? You're out of luck. Like, you can't get that loan unless you find another loan officer. With us, if that one lender tells us no, guess what? We have 100 other lenders that we could submit your loan to. In fact, I just did one where
It's genius.
one underwriter was not seeing eye to eye with me, and so I submitted to another lender and I got it closed.
Congratulations.
Right, so that's
How it's done.
That's how working with the broker is much different. I want to talk to you about our loan programs. We have many, but we're just going to come up with a handful of them right now. So VA loan. What's a VA loan? It's for the veterans, and obviously, if you're a veteran or retired veteran, then you could use the VA loan with zero down. You put nothing down. We could get the seller to pay your closing costs a lot of times, and so guess what? You might just be paying for an appraisal. The other thing I want you guys to know on the VA is you could actually buy up to 4 units, and then therefore using the 3 other units as your income, qualifying for higher on the sales price, and then therefore now you are a investor, but you're also living in one of the units. So that's a really good loan. And then Michele, you're going to talk to us about FHA.
Yeah, FHA loans. I love FHA loans. I consider myself an FHA expert.
Okay.
I do. Majority of my loans are FHA loans. I love them, and I think a common misconception is people think that you have to be a first-time home buyer to qualify for an FHA loan. but you don't. You can only have one FHA loan, period, and it has to be your primary residence. So those are pretty much the qualifications. I love FHA because they let you go down to 580 on the credit score. So, and that's what's great about them. You can go down it to 580, and it's for, somebody that maybe doesn't have perfect credit. It's just the perfect product, and it's only 3.5% down. And just like VA, you can purchase up to a 4-unit property, use that income.
So whereas maybe FHA might have a 200 monthly payment, conventional might have a 400 monthly payment. Just depends. So on conventional, the PMI will basically be derived from the FICO score, how much you're putting down. Of course, if you're putting 20% down on a conventional, then you don't have PMI. But if you're putting 5% down, you may have 400 a month on the PMI. So next, you are talking about down payment assistance.
Yeah, and I want to piggyback on that.
Okay.
So on FHA was something I didn't say about FHA. For the life of the loan, you've got mortgage insurance. So as it stands today, if you have an FHA loan, even if you put 20% down, you've still got mortgage insurance. I have heard that they're trying to change that rule.
I
Have
did
you
hear
heard
that
about
too.
that?
Yes.
So as of today, it hasn't been changed. So FHA, so if you've got that lower credit score, you can go FHA, but you will be paying mortgage insurance even if you put 20% down.
I have a question about
Yeah.
that. Because I do have an FHA loan myself. Are you able to play with the mortgage insurance amount that you put on the home, or do they give you the amount that you have to pay on there, and it stays that amount?
On FHA, it's just the amount. It's 0.55% of the loan amount,
Okay.
and that goes into your monthly payment. But if you went conventional, now what you should be doing is you should be refinance. And what interest rate did you have?
I think it was 2% the last
Okay,
time
so
that I
that's
checked.
pretty low. So
Yeah.
that's the thing. If you have such a
ever
low,
get rid of that.
yeah,
Yeah.
don't refi.
Don't do anything.
But
Okay.
if someone does have a FHA loan, and let's just say you have a 7% interest rate,
Yeah.
you definitely need to, well, once you get the equity,
Yeah.
you need to refi to a conventional to get rid of the PMI. But it takes you like maybe 5 years to do that once you have an FHA loan. And if you have the 6-7 interest rate, then definitely you would want to refinance. Okay, so you're going to down payment assistance.
So down payment assistance programs are available. I know a lot of people think they've got to come up with all this money for their down payment, but there's programs out there. My favorite down payment assistance program is CalHFA. It covers a percentage of your down payment and closing costs if you need them. And it's just a great program. There's many down payment assistance programs out there. Definitely reach out. Don't just assume that there's not money available and that you can't buy a house because you don't have the money, because there are programs available for you.
Awesome. Would you
Listings on the market, so we've got more people that are putting their houses up for sale, and if you look, you can see that these houses have been sitting for 60-90 days. I think the average length of time houses have been sitting is over 60 days right now.
Okay.
So think about it. When houses have been sitting here for over 60 days, right, these sellers are getting desperate. And what happens when they're desperate to sell their houses?
Go down.
They're more inclined to give the buyers a deal. So
Okay.
sellers are paying for closing costs.
Yes.
They're paying for buyers to buy down their interest rates, right? So they're giving you a discount on the house. So 100%, if if you were my relative, I would tell you, you buy your house now.
Gotcha.
And then I'll help you refinance and get your rate down in the future.
Okay.
When I first bought my first house, my rate was 6.75.
Oh, wow.
You know, and now I've got something that's in the twos, right? But I've refinanced 4 times during that time. You know
wow.
what I mean?
Okay.
So, and I paid $275 for my house, right?
Got you.
So do the math. Was it the right time for me to buy my house when I bought it at $275 at a 6.75 interest rate?
Absolutely.
Absolutely. Did I feel overwhelmed when I bought the house? 100%.
Right.
You know what I mean?
But
I'm going, no, the interest rate. But guess what? It's the best thing I ever did for myself. And so
Understood.
you have to get in and buy a house when you can. If you
Right.
can afford the payment, make it work, eat a little lighter, cut out the Starbucks, right? Save your money. I just did a video on that today. Don't
Nice.
go to Marshall's. Don't
Right.
go to TJ Maxx. Save your money
Right.
and buy
love
the
that.
house.
You
Buy
kn-
the house. Refinance later.
I love that too. And I was just talking to someone, it was last night, and he was saying that he's getting married. And I'm like, hey, don't take $40,000 for your wedding. I said, use that $40,000 for a new home, and then have a big party after you guys get married. Go to the courthouse,
Yes.
use the $40,000 to buy a house. He's like, that's a great idea. So I think
like
that's
that.
also, I don't think we need the big weddings anymore. I mean, I'm sorry, girls. I know you want to walk down the aisle. I
don't
know, I get
That's
it.
controversial
I
right
know,
there.
I know, I get it. But I'm just saying, do you want a house, or do you just want to walk down the aisle with the big, ticket? I don't know. So
Maybe they can get both. Another thing, they can get a gift for their down payment.
that's
You
true.
can do gifts, so you can ask a relative for a gift.
Right?
Maybe a wedding
Have a
gift.
party. Have a
Yeah.
party. Ask
For
for
your down
gifts. So don't give me gifts. Give me, money.
What a great idea,
For
right?
the down payment.
Fundraising
That's a really
for your
good
down
idea, actually. I like
payment.
that.
Promote
I like that.
What a great
That's
wedding
a great,
gift.
great
I
one.
didn't know that was something that they asked you though too, because when I was going to get my house, I had some money go out of my account, and they literally were
Oh,
like,
yeah.
"Hey, where does this
Oh,
money
yeah.
go? Where does this come from?" And this and that. And I'm like, "Hey, my
Yeah.
my
You
uncle gifted me
guys-
some money, so he had to write a letter. I
Yeah.
had to write a letter. I didn't know
You
that
guys,
they
it's
wanted
real. It's real.
everything.
So basically, I don't know, maybe 4 years ago, we started using our credit cards for everything and not our ATMs. So trick is use your credit cards, pay it off before the month is over, so that way you don't have a due, balance on the credit card. But guess what? When I do a home loan now, they don't see what I'm spending my money on. They see the money that's coming in. They see maybe checks going out, a couple things, but it's very light. So I'm so happy I changed that. And I'll look at someone's bank statements and McDonald's and and just every with your ATM, and literally it's the worst thing to do, because now the underwriter is seeing exactly how you're spending your money. So
Gotcha.
trick. Use your credit cards.
That's a great
Don't,
tip.
Yes.
Yeah.
Amazing.
And that I'm guessing that would streamline the process pretty
It's-
quick.
Loan with both of our, because we're both self-employed. So now they're looking at 12-month bank statements. So do you know how clean our bank statements looked, because we didn't have all this riffraff going back and
Right.
forth with
That's
that?
a great tip.
Yeah,
Yes.
it is.
That's
So-
a great tip for any
It-
self-employed person, especially out there. Because
Exactly.
when you're doing a bank statement loan, they're looking at your bank, every little
They're
thing
looking at every
on
nook
your
and
bank statement.
cranny. Like
That's a great
underwriters will ask me, like, "What is this?" I'm like, "What do you care?" No, no.
Right,
But it's like
right.
I have to go to my buyer and ask. The underwriter trumps the loan officer,
That's
and when
right.
they want something, we have to go and
yeah.
we have to go back to our buyer and say, "I know it's ridiculous, but this is what they're asking for, so please just give it to me."
Yeah.
Thank
Yeah.
Yeah, so sometimes we'll battle the underwriters, and sometimes we win. I just won on one battle this last week, and my processor, she was like, Carrie, she was like, "Oh yeah," she goes, "You fought for this one." I go, "Yeah, I did." I said I knew I was right. I went through the whole timeline of, the whole. I don't want to go into it now, but I went through the whole timeline, went through my head. I'm like, and then I put a really good email together and let the underwriter know what I thought. and it was with Kind
That's how it
Lending, and I
goes.
told them, I said, I thought you don't want to turn away any business, and they took that. All of them on the email are going, yeah, you're right. Like, we don't want to turn away any business.
Yeah.
So that was cool. So I want to talk to you about refinances. So the difference with the refinances, so people understand this, is that when you refinance your house, there's two different refinances in a sense. There's cash out, or there's rate and term. Are you just lowering the rate to then lower your payment, or are you getting cash out? If you do a cash out refinance, you need 20% equity in the house still. So what that means is, let's just say you take 500,000, you times that by 80%. You can't go above that loan amount from the 80%. If you're doing a rate and term, you could go all the way up to, I think, 95%. It might even be 100%. I don't know. It might be
Different lenders have different programs.
different programs. So on rate and term, you could use all the way up to the equity that you have, and then on cash out, they want 20% 20% equity sitting in your, not your loan, but in your home. That sounds funny.
Yeah,
And your loan
they
and in
used
your
to let
home,
people
right?
take out a lot more, right? And
Right.
then we had that crash where everybody lost their butts, and so now you've got to keep that 20% equity in there. But VA, I believe, allows you to go 100%.
Yes,
Yeah.
not just so you know, I found out.
So, a lender realtor combo working together just creates a seamless transaction for the client. So, when you've got that special magical synchronicity, is that a word? With the lender and the realtor, and they're just vibing together and they know how each other works, and you guys are just, in sync with each other. The home buying experience for the client is just amplified times 10, because they know they're fully supported by their realtor, they're fully supported by their lender, and it's just a magical thing. So realtors, if you're lucky enough to have a lender that runs with you, answers your phone calls, just works with you, just like this, they're the yin to your yang. I guarantee your business is doing better and you are more successful, because it takes a family of people. It takes escrow, it takes title, it takes a lender, it takes the realtor, it takes everybody working together as a team to create that magical 10-star experience for our clients, which is what we want. When you give that level of customer service, those people are going to tell 7 of their family and friends how great you are, right? And they're going to give you those good reviews that you need, which, I mean, I don't know about you guys, but
I love
that's
reviews.
what we're here
Word of
for.
mouth.
Yeah.
Definitely
We're here
word
to
of mouth.
create that experience for everybody. I want everybody that works with one of us to say, hey, those guys went above and beyond for me. I'm definitely going to recommend you to everybody I know. So
Yeah.
Well, and the other thing too is, when you're working with a loan officer that knows their stuff, we're at the quarterback,
Yeah.
bringing it home. We're the ones getting escrow. If escrow is not putting in their stuff or not giving us the vesting, if we don't have insurance, if the appraisal's not, we're making sure every line goes in, so that way we can close that loan in 30 days. If you have a loan officer that just puts it in and then just lets everybody else do the work, and it might not close on time. So we're always like proactive, pushing that file, making sure we have everything from the buyers, making sure we have the appraisal in on time, making sure we have escrow stuff on time. So because a lot of times even escrow, they'll send the package to us. Sometimes, oh, hey, fill this out.
Okay.
I'm like, that's your job. That's
know.
we do the loan
happens all of the
application.
time.
You know,
Uh-huh.
that should be something that escrow calls them on. It's a little pet peeve of mine, just
Yeah.
because I feel like we do so much. It's like if everybody does their own job, I am very happy.
Yeah. Yeah.
Definitely.
But that's what we do. We keep it together.
And that's what I was going to actually
we do.
ask. So I don't know if that ties into what you just said, but I wanted to ask, for your clients' unique financial situations, how do you guys stand in and help them to get the best products possible?
That's easy. So basically, we look at their credit, we look at their debt, we look at their assets, and we look at their FICO score. And so now we're going to be like, okay, so this is what you need to do to buy a purchase of 600,000. This is what you're going to need to do to buy 700,000. You may need to pay off some debt to get there. In fact, the client that I just pre-approved, you know, I'm having him pay off $20,000 of debt. He's putting down 5%. Him and his wife are putting 5% down. They were going to sell their property and put 20% down. Real estate agent talked him into keeping that as a rental, so we're using rental income for that property that they're holding on to. 5% down, they're paying $20,000 in debt, and then magically their numbers, because they have a 700 FICO score, my ratios can go to 50% on the back end, and we're at 49 point something. I work my numbers right where we need to go, but my client is very happy because I made the magic happen, and it's basically like putting a puzzle together. Every client is different. Every situation is different. I think of it as like putting a puzzle together.
Yeah. And as a broker, you're able to shop, you know, if one lender says no, you're able to move on to the next lender until you find a yes. And that's what separates us from a direct lender.
Yes.
We can pretty much say yes to almost everybody because we can shop around and find a
Till we
lender
find a yes.
that says yes.
Ah,
You can't
okay.
beat it.
Yes.
Okay.
And our rates are just
Off the chart
Yeah.
rates. Like, yes.
out there thinking that they need a bunch of money to buy a house. There's grants available. Grants are money that doesn't even have to be paid back. So, I mean, the only way to know what you qualify for, what's available for you out there, is picking up the phone and calling one of us so that we can walk you through it.
And we even have a link where you can, in the bio, where you can put your situation in. It's going to tell you if there's any down payment assistant programs available for you. So besides having us, we also have systems behind us.
Okay. Okay.
I think people think it's a lot harder than it actually is. Sometimes I feel like buying a car and going through the process of buying a car was more tedious than it is to buy a house.
Really?
And I think people talk themselves out of buying it. And maybe some people think, oh, well, you know, I'm only 20. I just did a loan for 20-year-olds. And talk about changing your life. You're never too young to start thinking about changing your life and building your wealth early, because we know real estate appreciates on average 5% every year. So the younger you are, when you start thinking like an adult, thinking about how am I going to make this $1 turn into 10, right?
Yeah.
Real estate is such a great way. Majority of the world's millionaires, they own a real estate, and that's not on accident, right? So
yeah,
I think people
As we're seasoned loan officers, we, within 5 minutes of talking to one of our clients, we could tell where they're going to qualify for. So it's kind of like just pick up the phone,
Yeah.
call us, and we could tell you, okay, this is what you qualify for. You qualify for a $2,000 monthly payment. This is that, which is not too much these days. But let's just say now you need a co-signer. We tell you, hey, go get a do you have anyone that you want to buy a house with? and then that can make you a homeowner. It's basically building wealth for you. Every time you make a mortgage payment, it's like putting it money in a savings account for you. So that's why we always urge people to buy and not sit on the sidelines. I think a lot of people sit on the sidelines because I don't know if it's called lazy, or it's like it's just problematic to like find my W-2s and pay stubs, and you're like, I think some people, I'm not saying
Maybe
everybody.
some people do.
I just think some people are like, oh yeah, because I talk to a lot of people, and then it's like, hey, get me this stuff, and then we'll get you approved, and then they don't, and they're not taking that risk. Risk means reward. If you take a risk, you're going to be rewarded in the future. So that's basically
Or maybe
what it
they're
is.
looking for the perfect entry point in buying a house. And I'll say, I've bought a couple houses and it never felt like the perfect entry
just had to go.
time, right? You're always in the back of your mind, you're going, well, is this the right time to buy a house? Is it? Guess what? So in my older self, I will tell you, it's a good time to buy a house if you can afford the payments. You can always refinance it. People are now taking out, so many people are sitting on so much equity.
Right.
I'm going to talk about HELOCs. People are sitting on so much equity right now because we just went through a super cycle. So majority of homeowners have all this equity. Now they're taking this equity and they're purchasing more homes with this equity. So you can basically borrow against the home appreciation that you've gotten, especially since that super cycle that hit in 2020. You take that money and you can pay off your debt with it. Get out of your 30% interest rate you're paying on all your debt. 30% is what credit cards are at right now, which is mind-boggling to me, but that is what it is.
Right.
You can pay that off, get yourself set up. You can purchase investment properties. You can take the money with your little investment, and sometimes you didn't have to make an investment at all if you bought a house, if you used a down payment assistance program. And then you can use that money, the equity, to purchase more real estate and change your life. It is hands down the best thing you can do for yourself.
That's something that we've been talking about as well. I wanted to know, and of course I'll be talking to Ms. Gabby, and now that I know you do it as well, in regards to what to do, because the same thing here is like I bought my house 15 years ago, and I've never touched the equity in it, so I know that
he has equity.
It is something in there.
So let's have you talk about the equity line. He would probably want to do an equity line opposed to a cash out refinance because he has a low interest rate. So what's the criteria or guideline for an equity line?
I mean, so if you do a cash out refinance, you're basically refinancing your entire loan. I mean, what's the easiest way to say this? You're basically so you've got this low interest rate. You've got under 3%, right? So if you do a cash out refinance, you're going to add the money that you're taking out for let's say you want $50,000 and you owe $300. So you'd be refinancing the entire loan so that now you owe $350,000, right? On a first mortgage, and your entire interest rate changes, right? And so you're like, I don't want to give up my under 3% interest rate. Why would I do that? Right? So you can refinance, or you can
Two mortgage? Okay. Two mortgage payments. Okay, awesome.
But you get to keep your low interest rate on your first, right? And then you're just paying off that second.
On the second, in
there's
regards
even
to
there's even a program that's a 30-year fixed HELOC. So, there's programs that are interest only HELOCs, things like that. But we've got a lender that we work with that's fantastic, and it's a fixed 30-year HELOC. So you can get one low payment, fixed rate over 30 years.
Oh, that would be, I'm sure, tremendous, like the one that I have right now, because I have FHA also.
And then you can take that money and buy another house, or buy 2 houses, or buy 3 houses.
Now, I was going to ask you that too. Like, if you get the money and you just say you refinance, right? Aren't they looking at your mortgage statement, or aren't they looking at your statement to say, hey, you just refinanced this house, how are you going to pay for this one? If I'm making sense with that, or is that a question that comes up, or no?
Qualify for it all.
Okay.
But if you're moving out of one to move into another one, a lot of times you can use potential rental income from the departing residents to help you qualify for the new one.
Right. Like, hey, I just refinanced for 200,000, let's just say, and now I want to take some of that 200,000 and buy a home. They're okay with allowing me to use some of this 200,000 to put the down payment on the home, as long as I can show them that I can afford the monthly mortgage
Yeah,
payment.
you'd
Is
have
that
to
pretty
income
much
qualify
how
for
that
it.
works? Okay. Okay. Go ahead, Miss Gabby.
I'm like, something's going on with me. Anyways,
You okay?
I'm okay. Okay, there it comes. Okay, so we talked about home equity line of credit. I was going to talk to you about fixed and arms, but we kind of went over that. 30-year
We
fixed.
did.
There's two different. 30-year fixed. Look at my voice.
Yeah.
Let me grab some water really
I
quick.
have it right here.
Okay.
I took a drink and it made it worse.
I will.
Oh no.
I'll ask. So while we have Miss Gabby clearing her throat, question for you:
Try not to cough.
do you or can you take me through a real life story that's happened where somebody, one of your clients, didn't think that they were going to be able to qualify, but you were able to get them to the finish line?
I just have the most wonderful story. Okay, so recently I helped some clients who've been renting for over 12 years.
Oh wow. Okay.
And they've paid over $300,000
Oh, my
on
gosh.
rent over the last 12 years. So not only did they pay that money in rent, but they also missed out on the equity building for the last 12 years. So they
Right.
could have been sitting on hundreds of thousands
Right,
of
right.
dollars, right?
1000%.
Had they purchased 12 years ago. And it took a lot. It took, and I would say they just weren't, they didn't maybe feel like they could do it, is really what it came down to. I don't think they ever thought they could do it. And if it wasn't for the incredible teamwork that they had a great relationship with their realtor. So the realtor is the first one who brought them to me, which I'm extremely grateful for, because we changed lives. We don't just do loans, we change lives. Because in 10 years, they're going to look back and say, this is hands down the best thing we did for our family. It's not just for them, it's for the kids. It's for the family, because in 10 years, they're going to have built up just who knows how much equity, you know what I mean? Depending on how the market goes for the next 10 years, but definitely have some money sitting in a nest egg,
Right.
Maybe they can send their child to college. Maybe they're going to take the equity out and use it to purchase more houses.
Right.
But this was a family that didn't think they could do it. So the realtor brought them to me, and we worked strategically together to get them into a house. And it just, the timing was perfect, and they are just so happy, and it just means everything to me.
That's
It's
awesome.
everything.
That's really awesome. That's really awesome. So in regards to this, what made you want to get into the mortgage space?
Oh gosh. So I started in banking
Okay.
forever years ago.
Which bank?
Chase, Wells
Chase,
Fargo, just so many years ago. And, it just kind of, I love helping people.
Okay.
And I feel like the world needs people like us in it that are honest, hardworking, and are going to do what's right for the client.
Thank you.
So, and that's what fuels me every day, because I know, unfortunately, everybody isn't like that. And so I feel like the world needs me in it to do these things so I can be a service to everyone and make sure the people I help are taken care of.
Understood.
You know what I mean? They've got a good, hardworking, honest loan officer working for them to get them the absolute best deal that's possible. And
That's
put
really
them
awesome.
in a product that's going to set them up for life, right?
Yeah. Because this is a life commitment, I think that everything that you said is really important in that regard, because like you said, this is not something that I'm just going to be doing for the next year or so. I'm committing 30 years to this thing, if not
Yeah,
more.
and I want to interject that, back in, let's say, 2008 or 2006 or even 2005, they had some loans that were, you would get them and they would be fixed for like 4 or 3 years or 2 years. Let's say it was fixed for 2 years, and then after 2 years it would turn into an adjustable. It was like the worst loan for
Doesn't
buyers.
sound
But
good.
guess what? Loan officers were putting these buyers in that loan program because they were making good money off of it.
Got it.
And then that's actually one of the loans that caused the crash in 2008 to 2010. The lenders were giving 100% financing, so people could be stated 100% financing. So that was back in 2005, 6, 7. Well, that's why we had the crash. Well, now today in today's market, they're not offering that anymore, thank God. And you have to really income qualify to then get you that mortgage, so that they have made it more stabilized for you guys to get a loan. Now they're not offering all these weird loans back in the day of like 2005 to 2008 where we're going to have a crash. So now it's just a solid, do you qualify for this sales price or not? So it makes it much better, much easier for us. But I do remember back then seeing a lot of loan officers going after those loans just because there was a lot of money to be made with them. And I was just like, I don't think that's right for the buyer. I don't think that's a good loan. Like once it adjusts, then they can't keep that house once it adjusts.
Are those like those
very high.
balloon payments?
It's not a balloon payment. It's actually, it turns into an adjustable. So balloon payment, what that means is, let's just say you had a balloon payment after 5 years or 15 years. That means you have to pay that loan off. You have to refinance to then pay that loan off. So balloon means that the whole loan amount is due at that balloon date.
Oh, okay. Okay.
So those aren't good either.
Yeah, I was gonna say I've heard about those as well.
Unless you get like a hard money and they're giving you like two years to fix your credit, they know that you have credit challenges and they go, okay, I'll give you the money. You're gonna put 20% down or 30% down, and in 2 years I want my money back. So they do a balloon in 2 years.
Gotcha.
But you better make sure you're ready in 2 years.
You're right.
Yeah.
Right.
So they
Otherwise,
have to.
you've got a big payment to make.
Yep,
Okay.
and they have to be, with that loan officer, so the loan officer could guide them into after that 2 years, okay, they're ready. And that's what we do as loan officers, is we're always talking to clients, and we're guiding them and giving them goals for what to do for the future, so that way they can be a home buyer or they can then refinance and be an investor. So we're always looking at clients that way.
Right. So let me ask you for, with the mortgage industry and things, how they are now. What type of trends are you starting to see, Michele, or what trends have you seen over the past year that the buyers should be aware and prepared for?
That's a great question. It's definitely a buyer's market.
Okay.
So for everybody that's been sitting on the sidelines waiting for it to be the right time to get into the market, let's go time, guys. It's a buyer's market. Like I said, these houses, the longer they're sitting on the market and the more houses we see, I think there's more houses for sale right now than there's been in the last 5-10 years or something like that. There's an insane amount of houses listed for sale that are just sitting there. And the longer these houses sit there, the more these sellers are willing to negotiate. So buyers, if you've been waiting for a sign, this is your sign.
Okay.
And
Okay.
also, we want the buyers to know that, let's say you're self-employed, there's still other great programs for you. There's the bank statement program where you would just put 10% down on that purchase. There is the DSCR loan where if you're buying an investment, you would be putting 20% down. You're just using the rental income of that property to then qualify you. So you don't need to show any of your income. You're just showing your assets. You're just showing the monies that you have in the bank. And there you go. You're now another homeowner or an investor at that point. So there's so many good programs. Right,
And we have
solid
access to
programs.
them
They're not the weird kind that they did long time ago. So it makes it nice for us as loan officers to be able to promote a good, solid product.
What would you say with dealing with your clients? What is the biggest mistake that first-time home buyers are making when applying for a mortgage?
The biggest mistake they're making? Where do we start? No, I'm just kidding.
Yeah.
Right?
It's there's a lot of mistakes that they can make, and basically I just had one where she took a leave of absence from work. That was a no-no. I'm like, thank God she went right back. They do a large charge, like let's say they buy a car in the middle of escrow, or buy something, or open up a new credit card. That's a no-no.
They co-sign for their family members' cars because it's not theirs, and the family member's making the payment. Well, guess what? If
Now
you
it
can't
goes on
show
your-
they've been making that payment for 12 months, it's now your debt, right? We've got to include it in your debt ratio.
Okay.
Right.
They buy things on Affirm, those buy now, pay later
Yeah, I hate
plans.
the Affirm. I don't know.
Affirm is trying to tell you can afford this TV. You can just make little
Yeah.
payments on Affirm. Well, guess what? As soon as the underwriter sees that Affirm payment in your bank statement, they've got to include it as part of your debt. In
Yeah,
your
like
mortgage, yeah.
like we said, they look at every little nook and cranny in your bank account, like bank statements. So you have to clean that up to make it look
Not
good.
depositing the cash into your bank account.
Right.
Cash sitting in
So
a
that's-
safe or under the mattress.
Right.
That, they want to see that you've had that money in your bank account.
So that's also, the seasoned loan officer is going to ask all those questions up front, like where are you getting your money from? We want to see it in the bank. If we don't see it in the bank, we're going to be like, where is that money? And they're like, oh, it's underneath my mattress. Okay, well, why don't you take that cash, put it in the bank. Let's wait 30 days until you get that new, and then now the underwriter's not going to see that cash, right?
Okay. That makes sense.
So there's ways around it.
So you guys know how to finesse the system, is what you're saying.
The tips and tricks.
All the
we
tricks.
know 'em all.
Got you.
Yes.
So how do interest rates really impact your monthly mortgage payment? And what should home buyers considering buying a home, should that be something that they really put emphasis on, or not as much? Just getting in would be more of the important factor.
Interest rates do affect your payment pretty significantly. I would say having a little bit higher interest rate affects the payment more than if you put more down, right?
Okay.
So it actually changes your payment significantly. But there's ways around it. Sellers are paying closing costs. They're giving seller credits to help our buyers get their interest rates down.
Yeah, you definitely want to be with the really good real estate agent that is putting your offers and negotiating for you to get your closing costs paid for, bringing down the sales price possibly, or raising the sales price to then get your closing costs paid for. So there's all different ways to negotiate from the real estate agent, but you need to be with an experienced real estate agent to also get past the finish line, I should say. I just talked to a buyer that's looking to buy a house, and he's been looking for 4 months. And he's up north, and I said, I think you need a new real estate agent for the fact that the one that you're working with now still hasn't been able to get you in a home. So, I did get this I got this buyer from another real estate agent, and I found out he's working with this agent. So now I'm trying to get him back to this real estate agent for the fact that he's been 4 months. So we have to ask him, hey, you have to cancel your broker agreement with that. And he said, I could do that anytime because it's already been 3 or 4 months. So that's the thing also to buyers. If you've been with an agent for 3 to 4 months and they can't find you a property, search another one, but search for one that has experience. Look at their reviews. Look at, who you're working with. Don't just choose a real estate agent because they're your cousin or something like that, because they may not know enough to then get you into that home. Remember, this is a big purchase, and it's something that's going to save you money for the future, and you're going to be building wealth with it, so you don't want to act lightly on it.
100% agree. Having an experienced realtor is a game changer, just like having an experienced lender is a game changer.
Yep, you need both.
You need the best team.
I
Yes,
agree. I
yes.
agree. So let me ask you this, in the regards to having clients and things of that sort, and outside of, let's just say, mortgage lending that you do, what is it, Michele, that you like to do on your off time when you're not doing
What do I like to do? I
mortgage
am a
lending
mom.
work?
And
Okay.
I'm
Mama
so
bear.
if I'm not working, I'm at a baseball game for
Okay.
one of my kids. My kids play travel ball, all stars. Shout out to Mikey. So proud of you.
Yep. Shout out, Mikey.
My boy. They play baseball, so we're heavy baseball, we're heavy sports, we're at baseball practices, we're
Okay.
doing that kind of thing. So I'm your everyday mom / full-time chauffeur for these kids,
Got
taking them
you.
around and
Got you.
working. And so I understand the importance of saving money. I understand the importance of, time. You know what I mean? And just, I respect people's time. And
it's not free.
that's what I like to do. I like to hang out with my family.
That's awesome. That's awesome. I know first impressions are very big in the industry that you guys are in, and the same with me. So let me ask, in regards to when you're getting with a client and things like that, this is more of the fashion side. What is it that you like to put on, or what is it that gets Michele into
Me?
that I'm getting ready to go kill it?
I feel like a good blazer is
mood.
good.
Okay.
I feel like, when I put on a blazer, I turn into
Businesswoman.
Michele.
Okay. Alternate AKA.
Superstar.
So if you see
Superwoman.
me in a blazer, you already know.
Okay, business time. Got you.
I love it.
So yeah, that's more so what you like to wear going in with clients,
Yeah.
huh? Okay, that's great. And then I always ask this as well: music. What kind of music do you listen to? What gets you in the
So,
mood to
I'm
go?
a huge SZA fan.
Okay.
She's my favorite.
I love
I just
it.
took my daughter to see SZA recently.
The concert, okay.
And it was amazing.
Got
We also
you.
saw Post Malone. We had front row seats.
Wow,
Yeah, he gave us all high fives, so that was amazing.
I've heard that he was a really cool guy.
Oh my gosh, such a good concert.
I heard he was
but
really
yeah,
good. So when you went to go see SZA, was Kendrick Lamar there
Kendrick
as well?
Lamar was there. I'm not a huge. I'm a Drake fan.
Okay.
Not a Kendrick fan.
I'm
Sorry.
over.
Sorry, Kendrick.
It's okay. It's
I
okay.
don't even know the difference.
It's
so.
okay. It's
but
okay.
everyone was there for Kendrick. I
Got
would
you.
say.
Look, I know that concert was probably crazy.
It was amazing.
Yeah.
It was amazing.
Live
She's
energy.
also a Chiefs fan.
I'm a Kansas City Chiefs
Yeah?
fan. Yeah.
Okay. I mean, I guess you're not tired of winning yet. I guess.
Never.
Okay.
Winning is good.
You're
Winning
right.
is good.
And then what I would say lastly, we have a segment where we always go into fragrances.
Yeah.
I'm a big cologne connoisseur, so again,
Okay.
I'm always going to throw it out there. I bring
I
one
love
every
Michelle.
week.
She's like, what's next?
Yeah, exactly. But for yourself, what is do you have a specific fragrance of choice or your
Yeah.
go-to?
I do. My favorite all-time. First of all, I probably have 50 different perfumes.
Nice.
We
Like,
are connected in that.
Literally all of them.
Love it.
My favorite all-time though is Gucci Guilty.
Guilty?
Oh my gosh,
Someone
it's
else
my
said
favorite.
that,
The
didn't they?
male
Yeah.
fragrance and the female
Yeah.
fragrance, like 10 out of 10.
Yes,
10
I
out
agree.
of 10. I don't know if it gets
I
better
agree.
than
I mean,
that.
is it pricey? Gucci's pricey, so is it kind of pricey?
I mean,
Not really.
it would be what you would expect for Gucci, right?
Like 300 maybe?
Would you say?
Yeah.
No,
I
no,
think
no,
200
no.
or something. I don't know how
Maybe
much. It
not. No, more like I would probably say between 150 and maybe
Okay.
2, depending on if
I
you
gotta
get the
go
big
sell
bottle.
it. I'm gonna go find it.
I've been wearing it. I mean, it's one of my favorites.
Yeah.
I always buy it
Gucci.
when it runs out. And I've had it since I started wearing it when I was
Have
18.
you have
not
you
to
ever
age
gone to the
myself.
Gucci restaurant in Beverly Hills?
No, but I want to.
You may not want to. Like we went
No?
for someone's birthday,
Yeah.
and there was 3 couples, me, my husband, and 2 other couples, and we each probably spent like $2,000.
$2,000.
We probably each spent.
And look, my
2,000.
eyes like you're right. I might not want to.
You may
They
not
have
want
the
to.
Gucci plates.
Yeah,
and
yeah.
everything,
It was beautiful. It was, a one-time thing. It was someone's birthday, but when we were, oh, that's the thing too. You know what it was? I'm sorry. We paid for the person that was his birthday, so maybe it was like 1,500. You know what I mean? But it was
But
up
still
there.
an investment.
It
would
was
say.
up there, and we're like, oh, we didn't really want to do
Was
that.
the food
but
good?
well, no, it was like
See,
you
that's
know,
where you
you
got
know,
me.
You know
Yeah.
how you have the gourmet meal and then they bring you this little thing,
Yeah.
like that. That's
Yeah.
what it was.
It wasn't
but then,
filling.
But then
So
we
you were
paid.
still
Yeah, it
hungry
wasn't
after?
filling. We were hungry after,
You
and
went and
then
got a burger.
we did the pairing with the wine though. So the wine, of course,
Okay.
made it
Shot
go back
up.
up. But
Yeah.
still, there's no reason to spend money like that. At least I don't like to spend money like that on meals. I know a lot of my friends do, but I'm like, they could spend like that. I'm like, I'd rather, go spend like $200 for dinner.
Yeah, exactly. I don't want to spend that kind of money on something that I'm not even going to get
No.
full off of. That's crazy.
Yeah.
That's
Yeah,
crazy
yeah.
if I'm still
The
hungry after that.
experience was
No,
fun,
no,
but
no.
not the price tag. So
Got you. So the Gucci Guilty, I know that
I
they
love
have plenty of flankers on that one.
Yeah.
Like just different versions of it. I know that there was one that just came out. And it's like a green bottle. But I like that. I like that
I
as
love it
well.
so much.
Look,
Ooh,
we got to
let's
do
smell
our
this.
waft.
oh,
This is good.
Yeah.
you can spray it.
You know
Just
what?
don't
It
spray
kind
it
of
on
smells
me.
like. What is that? Ice blue? No.
It does
No,
look
but it's-
blue. I'm all done.
Definitely
It
ice
smells
blue.
like it could be a male or female fragrance.
Oh yeah, it's I'm big on
He's big
on
on
unisex.
unisex. It
I'm very
is
big on unisex.
amazing.
on the
I love it.
unisex
What
stuff.
is that?
And so that's called Pure Dreamer by Karen Lowe. Did you get it?
That's a good one.
I knew it was
Yes.
gonna follow me.
Look, that's why you spray it and you got to bring it in. But yeah,
I love
that's called.
smelling good. I love scents. It's so good.
Yes, it is. I feel like people love to get on clothes. They like their shoes, and again, believe me, I love both shoes and clothes. I'm very big on that. But I feel like if you just have that piece that brings it together, which is that smell, it kind of goes like, okay, so I see the outfit, I see everything, and you smell great. What's your name?
And for us, it's
kinda
shoes and a
feel.
purse.
Right, exactly.
And the cologne.
See,
Or the perfume.
I,
and the
uh,
clothes. Like we like it all.
All of it.
We
yes,
love it all.
definitely. Like I said again, this one it's called Pure Dreamer by Karen Lowe, and it's more of a blue aquatic scent. It's definitely summertime. That
Good.
lasts on me about 8 hours, so it gives you
Ooh.
great longevity. And I think that whenever I put
It's a
it
good
on,
one.
I get compliments on it all the
It smells
time
like
because
it
it
could
kind
be
of
the
reaches
room
out.
fragrance.
Huh?
You know, it smells like it could be also a room fragrance. Just
Oh
like
yeah,
a light
you
and
can
airy,
spray it. And that's what I
crisp.
said. It's one of
Just
those like
not
what
overpowering.
is that?
Just a really nice, clean scent. I love it.
You get a good waft of that. So
It's a good
again,
one.
as I say every week, you guys eventually are gonna have to start paying me for this because I'm putting your name out there. But at the same time, you keep me smelling good, so I don't have a problem with it. But yeah, no. Again, we definitely come in. We appreciate you for coming in.
Yeah.
Miss Gabby, do you have any last words for Michele?
No, I just want to let everyone know I'm just loving Michele rocking the Antelope Valley as she's out there. She works with a lot of real estate agents out there. They love her, and I'm just so proud of her just being just such a rock star out here. So
Thank you so much. And vice versa.
thank you, babe.
Vice versa. Thanks for having me.
Yeah, no, we definitely appreciate your time. Continue to kill it out here. Look forward to following your career and seeing more of you. As always, we thank you guys for tuning in this week. We'll be back next week with a special guest. And as always, keep your irons, your swords sharp. And we appreciate you for coming in. Have a good week.
Thank you.
Cheers.